Maybe while Kristy's getting herself seated, Duncan, maybe we'll turn to you and start with the first question that we had put forward to the panelists. Picking up on Kristy's remarks, what, from where you sit with the investor group on climate change, is driving the sustainable finance agenda in Australia across your membership?
Yeah, thank you very much, Jo. Just confirming you can hear me okay?
Yeah, thanks.
Okay, and also noting that I'm coming to you from the lands of the Gadigal people of the Eora Nation here in Sydney. Acknowledge elders past, present and emerging. Just following on from the comments that Kristy made in her opening presentation, I think one of the key differences between the Australian and the New Zealand market is the structure of the markets. So in Australia, we have a market which is dominated by the superannuation funds we have over here, lots of asset owners, and asset owners generally have longer term priorities. So they're looking 30, 40 years into the future so that they're going to be around and able to pay out the liabilities they have to beneficiaries. And when you do that, you start to think about things like climate change, you start to think about things like sustainability, because those are going to have an impact beyond the short term on your ability to repay your beneficiaries. So I think that's one of the things that consistently drives sustainable thinking in the local market as an understanding of those issues grows. We have really strong demand from clients and from our members' own members. One example here is that the current government in Australia took a really strong, positive, proactive approach to climate to the most recent election, and was quite heavily rewarded for that in an electoral sense. So this reflects our own sort of analysis and understanding of consumer demand for action on climate in the market here. Another factor that is really playing heavily on people's minds, I think, is physical risk and resilience. So we have had a series of years now where there have been significant and unusual natural disasters, bushfire seasons starting earlier, more intense, cyclones hitting Brisbane, not something that's supposed to happen. So I think the broader community is aware of some of these shifts, the fundamental shifts in climate settings that they're used to, and this is driving some of the thinking in the local market. And then stepping back a little bit from community attitudes, it's worth mentioning the role of government and regulators. So the most obvious one in the recent time has been the disclosure requirements for climate for listed companies in Australia, but we're also seeing increasing pressure over the last couple of years from regulators on topics like greenwash, on labelling, and broader action on biodiversity and nature, and some of those topics as well. So there's a range of different things driving sustainability thinking in Australia, I think, amongst investors.
Thanks, Dean. Anything from you to build on that?
Yeah, I think I would agree with all of Duncan's comments, as I often do. And I think probably to add to that, there's a huge opportunity that exists that I guess speaks to some of Kristy's comments earlier, but that opportunity is really competitive when it comes to attracting capital. And so if it's becoming very clear that if you want to be able to grab that capital in a market that's got a lot of opportunities to invest in that way, then you're going to need to have the structures and processes in place. So I think there's no question that particularly in Australia, there's the opportunity for a really significant transition and for a lot of capital to flow into that area and a lot of profits to come out of it as well. And I think probably straddling both sort of jurisdictions a bit more in my role and in the way that I work, I guess living here, but sort of doing a lot of work in Australia, there's a reality that the vulnerability of some of this stuff is a lot closer to Australians' experiences and hearts than it has been to New Zealand. Duncan said the words before, bushfire season. In New Zealand, we worry about earthquakes. We don't have cyclone seasons, bushfire seasons, and we're not as used to living with and changing the way we do things for nature is what Australia has been. Obviously understanding that that's changing in New Zealand, and certainly some of the weather events in the last couple of years is likely to see that continue to change.
So, Dean, what are RIA's key asks for government in Australia? You can talk about New Zealand too if you want, but what are the key asks from RIA of government, and how's the political environment shaping the sustainable finance agenda there?
I think, look, the big asks at the moment are there's in Australia, there's a lot of things that are being codified and a lot of policy being put in place, and some of that is catch up from a period where there was really a chasm of policy in some of these areas for a while. I think one thing that is becoming a reality is that there are unintended consequences to some of those policies, and I think the really important thing is that when establishing policies, we're incentivizing the right behaviours, but we're not also putting barriers and blockages in place where they don't need to exist. And some of those are intentional, some of them unintentional. In Australia in particular, the Your Future, Your Super sort of legislation, which was brought in for all the right reasons around making sure that that super funds and that huge asset owner pool was doing the right thing from a fiduciary standpoint, but there's absolutely no question that there's performance test requirements in that make doing anything different more difficult and riskier than it would be otherwise. And when you've got an ASX, which Duncan will probably tell me what degree of warming that aligns to, if we're going to move and transition, investors need to be able to do things different for tomorrow than they're being done today. And some of the sort of policy settings make that a little more difficult. I think the other thing, particularly in the Australian market, there's a lot of work happening around classifications and labelling, and a lot of lessons that have been learned around the world in terms of how that can work, and again, how unintended consequences can add barriers to investors setting up high quality, sustainable investment vehicles and investment opportunities. And you've got to make sure that that legislation, with all the right intentions, doesn't actually make it harder for good investors making good, sustainable investment vehicles to be able to talk about what those opportunities are and attract capital and get capital flowing in those areas.
Yeah, great. Duncan, IGCC's got a pretty snappy set of policy asks. Do you want to take us through some of those?
Oh, thanks, Joe. I think, firstly, we've had a lot of success over recent years in terms of things we've been calling for government to take action on. So really pleased to see the introduction of the safeguard mechanism, which Kristy touched on earlier. Climate disclosure, of course, is something our members have been calling on for quite a long time. Sector transition plans is critical in terms of allocating capital for universal owners amongst our membership. The establishment of the Net Zero Economy Agency is a really interesting one, making sure that for communities impacted by closure of fossil fuel intensive installations, that there will be a reasonable plan in place to make sure that there's a fair and fast transition to a net zero economy. So there's lots of good work that we're building on, I think. We're certainly calling on government to maintain the sustained level of ambition that they have on climate. At the moment, we're kind of digesting a bit of a blur of policy announcements in Australia. Our head of policy, Frankie Muscovich, calls it policy palooza. So last week and the week before, we saw the release of the National Climate Risk Assessment Report, which was really quite daunting in terms of highlighting the risks to communities and the economy from climate if work isn't done to mitigate the impacts of climate change. And that report highlights lots of opportunities there for adaptation in areas where we should be working and thinking about how the climate is going to lead to the shifting of industry, the shifting of communities and things like that. So some quite confronting information in that document. And that, of course, was followed up by the release of the Australian and the NDC, the National Climate Targets. We were reasonably pleased with the range that was settled on by the government, 62 to 70%. But from our perspective, if we are going to expect any kind of opportunity to keep warming below 2 degrees, to keep our economy going at a level that's aligned with that warming target, we really need to just talk about this as a 70-degree target. And we're making sure that when we talk to policymakers, we are thinking about that, the top of that ambition range. More broadly, physical risk and resilience continues to be something that we talk to government about, making sure that investments and investors are able to act in a way which ensures that people are thinking about those physical risk and resilience implications of investments and being able to plan for adaptation. And really importantly, I think, and increasingly importantly, it's making sure that we're bringing the community along with us when we think about these things. So the topic of just transition is always on our mind, and making sure that the impacts are felt broadly across the community rather than focusing just on particular sections of the community. I think I probably would have also mentioned a few of the things that Dean mentioned there about making sure that investors who do have those open, strong climate targets are able to do the best they can and not spend all of their time thinking about compliance. So, yeah.
Kristy, how about ASFI? You've always got something to ask the government for.
Always. So I guess three key buckets of asks. One is the Sustainable Finance Roadmap that government released in June last year is kind of working their way through implementation. And as Dean mentioned, kind of product labelling is part of that, transition plan guidance is part of that, developing a taxonomy is part of that. There's still more work to do on all of those things. We have a small slice of what the taxonomy could deliver. It only covers climate mitigation at the moment. And then the sort of thoughtful implementation and iteration of those things as they are kind of rolling out and being open to what the next wave of the sort of sustainable finance agenda is important. The second area would be thinking more broadly about corporate and financial regulation, and Dean mentioned your future, your super. That's a key one. There is sort of competition law reform that still needs to happen despite kind of positive noises by our competition regulator to enable sustainability related collaboration that will be needed to accelerate this transition, and we've been doing quite a bit of work with our competition regulator and a task force in Treasury on that, and then things like capital weightings for the banking sector to really unlock capital in the way that your future, your super reform would do in the superannuation sector. And then the final bucket of asks is around sectoral policy, and I would say nature reforms, that, and I know Rhea's working on this as well, reform of our nature laws at the moment will provide both better outcomes for nature, but also better outcomes for business, and getting to a quick yes or a no based on regional planning will be really important for sort of long-term kind of productivity and enabling the energy transition, as well as broader kind of meeting Australia's economic development needs in the future too.
I had nature as my last question, but I think we should go there now. I guess the nature market kind of program of work, the policy related to nature markets, voluntary markets in New Zealand is emerging. What is happening in Australia? And specifically, it would be good to hear your thoughts on what the demand drivers are and the role of the taxonomy.
I'll start and then pass down the line. So we do have a nature repair market that now has a number of methods that have been approved. And so there is sort of a voluntary biodiversity market. It's unclear where demand for that will come from, and then partly this is linked to the EPBC reform, the reform of our nature laws, and whether that will be sort of through that process enabled to be an offset market, but that is not on the table at the moment. So there's been a lot of work and effort by the department and experts in setting up that voluntary nature market, but it's very, very nascent still. What we are seeing through the work that we've done on nature criteria for the taxonomy and the pilot for the taxonomy is really strong demand in the agriculture sector in particular, and working with the big agri-banks in Australia to develop sort of green finance products for farmers that can enable them to receive sort of discounted finance for sustainable farming practices, things that they are already doing and that have positive both nature as well as climate mitigation, adaptation, resilience and productivity benefits on farm. So that's where we're seeing kind of the biggest area of interest from financial institutions as well as from the farming sector, and that's not your traditional kind of conservation covenant where some of the biodiversity credit market in Australia is sort of focusing it.
Thanks. Ria has a nature working group. Tell us about what's happening from your perspective.
Yep, so we do have a nature working group. It's our most engaged with working group amongst our member base. And I think that speaks one to the importance of nature as an opportunity and a challenge, but two, I think the scale of the difficulty and probably grasping how it is exactly we're going to figure out how to integrate this into a financial system. I think there's no doubt that that nature is being seen by investors as being really critical. We're seeing that in particular driven out of the European investors who really have taken hold of this and understand the potential risks that are existing with initially simply with a lack of understanding of how nature is impacting their organisations, and a growing understanding as they map how this is working, that these more than just agricultural products and agricultural companies are actually incredibly reliant on nature and all of the various iterations that presents in. And so, there's a huge understanding of the need. I think there's no question it's a really big challenge. Carbon is carbon in all different parts of the world, and can be measured quite simply compared to some of the kind of nuance that we're seeing in the nature space. Huge amount of appetite for it. A lot of also understanding that it's really going to be something that needs to be done in partnership across lots of different groups with local government, federal governments, company, Indigenous, groups in various sort of parts of the world. So there's a lot to unpack there, a lot of appetite, but a lot of work to be done to figure out how to actually build it constructively into investment markets in the way that we've really started to see the environmental and the carbon aspects start to come in over the past kind of 5 to 10 years.
What's your take on TNFD uptake in New Zealand?
Secondary to that is there's no doubt that from a New Zealand perspective we have fallen behind on the nature agenda, and so part of our working group, the RIA working group, we are leading the TNFD work within Australasia, and comparatively we had really good engagement within Australian organisations right across private, public sector, large, small, people wanting to engage in this, and for those that aren't across it, TNFD is effectively climate reporting but for nature. That's not really what it is, but it's the simplest way to do it without spending an hour talking about it. Don't tell anyone of my work that I said that. And what we saw was a real interest in engaging across the Tasman. In New Zealand, we had virtually no interest at all. Littleton Port Company are the leader, and they are alone in that regard. We went early and first on climate reporting, and we can be really proud of that, and we should be really proud of that. But there's no question, I think, that took the oxygen of the sustainability conversation, while other areas were really diving into nature, and we've got some catching up to do.
So Duncan, you're the investor group on climate change. Any insights into your membership sort of positions and priorities related to nature?
So the first thing I'd say is that we're deeply respectful of the role of our peer organisations in this space. So as you mentioned, we have a laser focus on climate here at IGCC. RIA does great work in the areas they work on. ASPI does great work in the areas they work on. And we're doing our members a disservice if we go out and duplicate work that's already been done. So very careful to make sure that when we do look at everything, anything related to nature, we're looking at it very carefully through that climate lens. I note that at the last biodiversity COP, someone made the point that, and it's resonated through a lot of conversations I've had, solving the climate crisis won't solve the nature crisis, but solving the biodiversity crisis may well just solve the climate crisis, right? So it's critically important that work is done on both these topics and that they're informing each other in terms of where risks lie, where opportunities for investors lie, and how we can come up with a way forward that really benefits the climate as well as nature. From our perspective, the key element that we're looking at here is adaptation. Physical risk and resilience is an area where one of the key levers and the key tools that investors can deploy in terms of making sure that the projects they invest in are resilient, that they are mindful of changes to climate, is utilising nature-based approaches. So thinking about tree plantings, thinking about riparian vegetation, thinking about location of sites and facilities and things like that. So when we do look at nature, we try and look at it as much as possible through that climate lens.
And Duncan, do you see that there's a difference in investor appetite or ambition for climate action across the Tasman between New Zealand and Australia?
So I think, as I mentioned earlier, I think they're quite different markets. So there's a couple of things that we have going for us when we talk to our Australian members that our New Zealand members don't have as strongly. So we have that diverse asset owner background here, which is really looking for long tail solutions to climate. The New Zealand market is much more retail focused, with presence on KiwiSaver and being a key thing. So it can be harder, I think, to have some of those longer term conversations. So that's a bit of an advantage the Australian market has. From a Kiwi perspective, the way that investments are made in New Zealand is very different. The Australian market is quite resource intensive. Lots of stakeholders with vested interests in fossil fuels and resources in this market, so they can make some of the engagements and some of the policy conversations a bit more fractured and fractious than they need to be sometimes. New Zealand doesn't have that problem, and so can have some, I think, cleaner conversations, better opportunities for coming up with a consensus at an economic level than we have in Australia. The fairly obvious shorter term difference at the moment is the current political environment. So lots of conversations about this at the recent RIA conference. Congratulations, Dean, on a fantastic conference, by the way. If anyone in the room wasn't at the RIA conference, you really missed out. It was a fantastic event. Yeah, there's been very interesting implications, I think, in terms of the timing of those two elections in the context of international developments as well. So there's no doubt a much more positive environment in Australia for constructive conversations with policymakers around climate than there is in New Zealand at the moment. That's a challenging time, but investors are long-term investors. These risks aren't going away. And one final thing to touch on that we do talk about quite a bit here in Australia, and I know a lot of our members look to New Zealand with slightly envious eyes, is the tone that comes across from regulators in New Zealand. So there's definitely been that sense that Kiwi regulators have been willing to allow investors to learn their way through things like compulsory disclosure, to learn by doing, whereas this has been contrasted with the approach by some of our regulators over here, which have been a much more compliance-driven approach and led to a bit of nervousness amongst investors in terms of setting public targets, in terms of how they communicate about their approaches. So there's swings and roundabouts in both directions between the two different markets.
Thanks, Duncan. I'd like to talk for a minute about the taxonomy and gas and key learnings from the Australian experience with the taxonomy development. Yeah, and I think the important thing to say up front is sort of the why and therefore what
was important in the development of the taxonomy. In every country, there are sectors where there's both political challenges and very intentionally the partnership approach that we established with government meant decision making in the same way that happens in New Zealand is made by a technical expert group and is not final decisions on criteria included in taxonomy is not made by government ministers or government departments. And that was seen as incredibly important from an integrity and a credibility in financial markets perspective. That separation enabled us to do the work. I think in many other jurisdictions that haven't had that separation, taxonomies have been bogged down for years and years and years and never kind of come out the other end of that process. So setting up both that close partnership between government and industry, but also ensuring the governance processes were clear and somewhat separate was really important. That also then allows us to draw out the difference between what is a sector plan or the expectations and the range of factors that government needs to consider when you're doing a transition plan for a particular sector versus the decarbonisation pathway required from a scientific perspective based on the carbon budget that you have in a country, and therefore as a science-based credible taxonomy you are hooking criteria to the sector decarbonisation scenario rather than government's plan for transition of a sector, which takes into account a whole range of other factors like energy security, politics, sort of access for residential users, whatever it is that government wants to take into account. That said, the other thing that was important was taxonomies are activity level tools. So they are at very granularly, gas is not an activity. Gas extraction is an activity. The use of gas in particular manufacturing processes as an activity. The use of gas in electricity generation is an activity. And so it's at that level at which a taxonomy considers the sort of environmental performance of an activity rather than as a sort of large macro kind of consideration. So what helped us kind of navigate through what was probably one of the trickiest, most politically sort of supercharged topics or areas of the taxonomy, I think being very clear about the principles underpinning the taxonomy, so why we were developing a taxonomy, and that was to ensure that we were able to attract and mobilise private capital for the transition in Australia. And particularly for European investors, it's essential that classification tool uses a scientific basis on which to make that classification. So that became kind of a bit of a North Star as our taxonomy expert group were discussing lots of these issues. We also did, similar to what you're doing here in New Zealand, a huge amount of consultation with different parts of the sector. And that consultation, both through meetings as well as through written public consultations and more private consultations, enabled people to understand the range of ways in which gas was being considered rather than look at one sector and say, well, gas is not included in that one sector, being sort of electricity generation in our case. It's included in specific circumstances, which is for peaking alongside renewables as a portfolio of energy assets. So the TTEG kind of, while it's an activity level tool, provided additional guidance so that banks or investors could have a little bit more nuance in the application of the taxonomy to a portfolio of energy assets. The other thing, I guess, that was important was the timing. So we did the energy sector early and then did the manufacturing sector later. Gas is included in many manufacturing processes as the most efficient way, given current technology, to achieve the level of heat that you need in many industrial processes. Having our time again, I think we probably would have done those both together, because I think there are many gas industry stakeholders who might be, in extraction or pipelines or other things, that when the energy criteria came out and there wasn't a role for gas, given the scientific decarbonisation pathways, created a lot of noise. That was then allayed by the way that sort of the considered way that it was considered in the manufacturing criteria. That timing wasn't up to us. That was sort of a discussion and negotiation with government. But I think having a broader range of sectors being developed together actually is helpful to give particular parts of industry and stakeholders the full picture rather than little bits of the picture.
Thank you. How are we going for time, Beth? Great. So my last question is, we think COP's coming to Australia, right? So what opportunities do you think that presents for Trans-Tasman, maybe collaboration, opportunities on sustainable finance? We'll go to each of you, and then if there are any questions, we can close.
We're thinking about COP as very much a driver for ambition. So it is the opportunity for our region to be on a global stage and be influencing, I think in the very practical, pragmatic way that we tend to do things in this part of the world, how other countries go about mobilising private capital for these agendas. So we're thinking about the taxonomy, for example, there's the opportunity to not just have developed what is a really practical, credible, usable taxonomy, but to demonstrate that using flagship transactions in sectors that matter to both of our economies, to demonstrate what transition looks like and the role for finance in transition of those particular sectors. I think there's the opportunity for us to think much bigger about our role in supporting the transition of emerging economies, so Southeast Asia, the Pacific being a big one where both of our countries kind of play and support. And that's not just the transition to a lower carbon kind of energy system, but also that adaptation resilient piece that is incredibly important, particularly as you talk about the Pacific, and being a little bit more sophisticated and nuanced about the role of private capital in that. International climate finance discussions are often focused on public finance from developed countries to developing countries. The agreement that was made last year meant that there is now a much more a broader recognition, even by developing countries, that private capital has a really integral role to play, but that needs to be done in partnership with the public sector as well. So that sort of blended finance area, or taking some of those quite practical examples of how we can mobilise climate finance into the region, I think would also be a good opportunity.
Dean?
Yeah, likewise, I think it brings a level of accountability into the scenario, which helps so that hopefully that ambition is matched with action. I think the opportunity and subsequently risk, I think if we miss it, is that there's already been a lot of noise about, the ambition around, carbon reduction targets, but how are we actually tying in, nature as an example to that, and keeping it on the agenda, given the fact that those two go hand in hand. And likewise, particularly true in an Australian environment, but also for New Zealand's, how do we make sure that First Nations rights and their accessibility to finance is integrated into that as well. I think it's a really key topic that we need to solve for in terms of a just transition, but also, a lot of the solutions in both countries are based around landowner rights that are linked to First Nations or Indigenous groups. So making sure that those things are linked in as well is really important, because I think that ambitious target is great from a carbon perspective, but it can't come at the expense of linking those other key aspects into the agenda.
Thanks. Duncan?
I'll just be quick so we can have plenty of time for questions, actually. But I think the other two have touched on most of the important issues. I don't think we should underestimate the importance of having global eyes turned onto the local market. I think we've already seen that play out to an extent, given that the Australian government was under a lot of pressure to go with a lower national target, but they ended up compromising with a top end of the target that had a 7 in front of it. I think that was certainly done with an eye to international community acceptance. Setting strong targets means that you have to have a strong implementation process in place to have any hope of achieving the targets. And a forum like COP, bringing all the global attention and all the global capital to the local region, is going to be incredibly influential in that respect. Also noting, I think, and supporting the approach that the Australian government has taken in terms of framing it as not just an Australian COP, but as a regional COP. I think that's incredibly important. And for the first time, we will have an intrinsic role there to be played by emerging, developing regional economies in that discussion. And I think that's going to be really, really helpful in terms of making sure that as the physical risks of climate change start to manifest themselves on some of those most vulnerable communities in our region, that appropriate attention is paid to those sorts of things. So, yeah.
Thanks, Duncan. I think we're nearly at time, but we've got time for a couple of questions. Any questions from the floor? Go ahead, Pip.
Hi, I'm just interested, given we've got the New Zealand Australian perspective, and I still follow a lot of the Australian news cycle. One of the things that seems quite different to me, and I just want to know how impactful you think this has been, is the business support for the opportunity and some of the modelling on the size of the opportunity to decarbonise. And now you can kind of see it spreading into the, if we decarbonise and consider nature at the same time, the opportunity is even greater. I feel like we may not, that might be a little bit of the missing dialogue in New Zealand, that we don't have that kind of view on the upside to the economy. I'm just wondering how important that has been, do you think, to drive action? And some of like the key real stark differences to me, I think I read something the other day about the an agricultural business group complaining that the government wasn't releasing information on how bad the climate would be if it wasn't maintained between 1.5 degrees, which is really, I guess, it's stark contrast to the dialogue in New Zealand. So I guess I'm just wondering how important has that been, on top of the differences obviously around government, etc.
That sounds like a good one for you.
Yeah, I would say absolutely critical. And this opportunity, it's been interesting to see how the I guess the policy, what's flicked the policy levers. And under the previous government, it was we will miss out on international capital generally if we are not able to keep pace on climate. That's why we signed up to Net Zero 2050 kind of back in 2021. So it's not keeping pace, and then it's over the last 3 to 4 years, I would say, shifted incrementally to actually our long-term prosperity depends on us being able to do more than dig up fossil fuels and export them. What is the economic opportunity of the future? And this applies beyond kind of the mining and resources sector, obviously, that relies on huge amounts of renewable energy generation to happen in Australia, given the sort of the natural assets that we do have, and then we can move further down the critical minerals processing chain, for example. Similarly, in the agriculture sector, how do we maintain access to European markets that are expecting standards of sustainability that some of our producers can currently meet, but not everyone can currently meet. And so that being a continued economic opportunity market access, kind of a play in the agriculture sector. But I would say most Australian business kind of responds to economic opportunity rather than the burning platform has to be pretty burning for that to work in the long term, to do more than just compliance, I would say. So, I think it's been really important. And you can see how important the current government thinks, because of the way that they got Treasury to do their modelling to come out with the target, is, I think, a good indication of how valuable they think that opportunity narrative is to bringing the rest of the Australian public on board, not just kind of the business community as well.
Thank you.
I just I think that's exactly right, and I'd just like to add a couple of things. One is that we had the example here of the Treasurers Roundtable, where key industry players were invited in, and it was really pleasing that we were able to be part of that conversation on behalf of our members, talking about the important role that climate finance plays. And the other thing to note is that whether it's Australia, whether it's New Zealand, whether it's other parts of the world, there is also a degree of fact that's important here. One on the downside, which is that climate is a risk. Climate is going to harm returns, and I think investors globally have a responsibility to speak up where they know that there are factual issues that are more important than the political wins of the day. But on the other side, on the upside, renewables are now cheaper in almost all markets around the world to install than fossil fuels. electric vehicles are much more efficient choices for most fleets going forward, and when the infrastructure is in place. So when you see one of the most hostile political environments to ESG in the world, Texas, also being one of the markets in the world that is the leader in terms of installing renewable energy, you know that they're not doing it for values-based reasons. They're doing it because it makes economic sense. And I think that is a fairly fundamental shift. It's going to be a baseline for both Australia and New Zealand markets.
Thanks, Duncan. I think we're out of time. Beth? Exactly. We've got people online, so we're running a tight ship here. So I wanted to say thank you to our speakers for coming. Thanks for coming from Australia. Thanks, Duncan, for being emissions conscious and not coming from Australia. Thanks, Dean, as always. And thanks everyone else for being here. Please look out for our upcoming registration details for the December Partners Meeting, which will flip back to being an online meeting. Thanks, everyone.